Perfect. So thank you for joining us today for this webinar around Saudi expansion and then your Dutch exit tax planning. For those of you who do not know Nimbus or US or myself, we're essentially going to introduce ourselves and then walk you through how you're able to set up your company in Saudi Arabia and how you can essentially plan to exit Netherlands efficiently when it comes to tax. Now, for myself, my name is Ibtasam Aziz. I head the Saudi expansion unit here at Nimbus. I've been in this industry for about 5 years, and over the course of 5 years, I've helped multiple companies expand their offices to the Middle East, predominantly Saudi Arabia, across multiple industries. And we'll go into a bit more detail later on in the slides. But for now, I'd essentially like to invite our guest, Joost, to introduce himself and tell you a bit about his firm as well.
Yes, thanks Ibtasam. My name is Joost de Leeuw. I'm a tax advisor at DTS in Amsterdam. We are a boutique tax firm specializing in helping Dutch investors and entrepreneurs, business owners to expand worldwide. In many cases in recent years, this has been directed by. We've helped dozens of Dutch companies move that way and solve all their corresponding tax issues. Recently, I noticed that a lot of those clients and also a new audience is looking at Saudi Arabia, place to move, place to invest or to do business as a market to tap into. And that's how Ibtasam and I got in touch. We worked together on a few clients, and I'm really happy that I have a whole hour now for him to share his knowledge and to learn from him. And I will contribute some of my experience and knowledge about Dutch exit taxation. Full idea of what it means to do business in Saudi as a Dutch business owner.
Perfect. Thank you, Joost. And we'll go into a bit more detail about Nimbus as well. So who are we, what have we done, and a bit about our experience as well. So we're basically your market entry partner to the Middle East. Now, although this webinar is focused towards Saudi expansion, but we basically help clients set up in the UAE as well as Saudi Arabia. We established ourselves in Dubai back in 2019 and then slowly expanded ourselves to Saudi as well. Over the course of these years, we've essentially consulted with about 6,000 plus companies, which is surrounding company formation, taxation, accounting, bookkeeping, succession planning, asset protection, asset management, and basically corporate services. We've expanded about 600 plus companies to the Middle East across multiple industries from 30 plus countries. We're member firms of BGI Global and IR Global. Now, the reason why this essentially matters is because experience comes in very handy when you're essentially looking to penetrate the Middle East as a market of preference, because each industry varies in regards to the approvals that are required to fully set yourself up and run your business in the Middle East. Now, what we'll cover today is basically walk you through a high-level overview of how you're able to set up your company in Saudi Arabia. We'll talk about tax in Saudi as well, and then we'll go into the exit tax for Netherlands. And then at the end, we'll have a small Q&A session as well for any questions that you might have. Setting up a company in Saudi Arabia is complicated. Now, that's not to scare you, but it's more to educate you as to what you can expect while essentially expanding to Saudi Arabia. So the first thing is that you have to deal with a lot of different ministries. And when I say a lot of different ministries, I mean 20 plus ministries in order to set yourselves up properly and keep yourself compliant while operating within the kingdom. There's a constant change in rules and regulations. So what's true today might not be true tomorrow because it's still an emerging market and the framework constantly keeps on changing within the kingdom. Every wrong application or every wrong move can cause delays and essentially prove costly as well, because you'll have to resubmit all of your applications. So Saudi being a predominantly heavily Arabic dominant country, it's really important to get the right advice, to get the right market entry partner to help you navigate that process within the kingdom. Hence why an on-the-ground team is required. Basically facilitate that as smoothly as possible. Now, against the misconception, you do not need a Saudi partner for a lot of activities in Saudi Arabia now, which means that you can have 100% foreign ownership within the kingdom. Now, back in 2018, when Sagia was converted into a ministry, which is now called the Ministry of Investments for Saudi Arabia, Saudi introduced 100% foreign ownership for a specific list of activities, which keeps on growing year on year, but you're able to now fully own your business as compared to the previous model in which you would require a local partner to have a presence within the kingdom. Now, how this works is being individuals, you and I cannot go to Saudi Arabia and start a company from scratch. It has to come off from a corporate standpoint, or a corporate shareholder or a company needs to expand itself either as a branch or a subsidiary into the kingdom. Now, the general recommendation is always going to be a subsidiary as compared to a branch, because a branch doesn't limit liability onto itself. The liability falls back onto the parent company, whereas in the case of a subsidiary, it's a limited liability company, and the liability is held within Saudi Arabia as compared to the parent company. Some activities still require a local percentage, so anything that's legal, financial, has to do with tax, engineering. Generally, professional services do require a local partner, in which you need 25% of a local partner to own the business, and the rest of the 75% can be held by a foreign entity. And then that's a joint venture that's going to essentially do business within the kingdom. Some activities still are prohibited, so anything to do with the military, anything to do with HR, anything to do with security, and there's a whole list which we can share essentially after the webinar. But there still are some activities which are prohibited for 100% foreign ownership within the kingdom.
Okay, so if I understand correctly, as a Dutch business owner, if you do not plan to move to Saudi yourself, but you do want to invest in a business there, you need to use your Dutch holding company to invest in a Saudi company.
Yes, so they can either invest, which means they can acquire shares of a business within Saudi Arabia, but that has to be through the holding company and not as an individual, or they can essentially expand a subsidiary of the holding company into Saudi Arabia in order to do that, in order to then do business within the kingdom.
Right. Okay.
So requirements to set up in Saudi Arabia. Now, because it's coming from a company rather than an individual, so the documents which are required would be that of the company and not of the individual. So generally there are two routes. One is a startup and one is a established business. Now, the startup route is based off of the discretion of the Ministry of Investments. So you apply for an approval. If your startup gets approved to expand to Saudi Arabia, you can expand it. If not, you'll have to go through the established business route. Now, the general difference between both of these routes is that the startup gets a benefit of the license renewal fees being less as compared to the established business. So we'll talk about this in the upcoming slides as well, but the first license that you get for essentially doing business in Saudi Arabia is your MISA license, or your Ministry of Investments for Saudi Arabia license. Now, in the case of a startup, the renewal cost is 2,000 Saudi riyals for the first 3 years, whereas in case of an established business, it's actually 62,000 Saudi riyals over a course of however long you're established for. So you essentially save up on about 180,000 Saudi riyals for the first 3 years when it comes to renewal cost for the startup. Now, the startup needs to meet certain criteria. It needs to be something that's new, innovative, and adds to the ecosystem within that specific space in Saudi Arabia. You need your startup brief, you need your pitch deck, which need to clearly state how you're going to add value to the Saudi economy. So that's the revenue projections, that's how many people are you going to hire, and then how many people are you going to hire and upskill within the next 3 or 5 years. You'll need your trade license, articles of association for the business. You'll need a board resolution stating your intent to expand to Saudi Arabia, and you'll need a power of attorney as well, which will allow us to act on your behalf and essentially do the work that is required to set you guys up. Now, the last thing which is required is actually the most important thing, which is an incubation letter and a support letter from a VC. Now, we can issue the incubation letter because we're a licensed incubator in Riyadh, stating that we're incubating this business within our ecosystem and will essentially support and help their growth in the coming years. But you'll also require a VC letter. Now, the reason why this is required, and I'll do a bit of a comparison as well, is it needs to show that a VC firm has invested X amount in your business. That letter needs to state that the VC essentially believes that this is a good idea. It's going to be a good idea for the Saudi market as well. And in simpler terms, it's basically proof that you have enough money to sustain yourself. When you come to the established business section, you require the same documents, so trade license, articles of association, board resolution, power of attorney. In this scenario, how you're showing your financial well-being is through your audited financial statements for your last fiscal year, and they essentially need to show profitability. Now, a question that I generally get asked is there a amount that needs to be shown on the P&L? So the answer to that question is no. It just needs to be profitable to $5,000, $10,000, and that has worked in the past as well, but it cannot be negative or it cannot be showing losses.
And this audit needs to be done by a Saudi accountant or can be done by the house accountant?
So this is going to be from the parent company's country.
Okay.
Yeah. And an independent audit firm needs to audit the account. It cannot be from their own accountant.
Right. Okay.
Yeah. So in both scenarios, you need to get your documents legalized. So Saudi is treaty to the Hague's Convention. Now, the parent company's country, if that's also a part of the Hague's Convention, you can just get your documents apostille, so notarized and then apostille, and then that's fine. That's considered a viable document within the kingdom. If the parent company's country is not part of the Hague's Convention, then you need to go through the conventional route, which is the Ministry of Foreign Affairs of that country, and then the Saudi consulate for that specific country. If that specific country doesn't have a Saudi consulate, then the nearest country is fine, essentially.
Right. Well, we are a signatory to the Hague Treaty, so for the Dutch investors, the relatively easy route is accessible. Do you expect that this whole procedure is going to be simpler and more straightforward in the future?
So ideally, yes. I mean, how we like to term it is that Saudi is where Dubai was about 10 years ago, where
Right.
they're still introducing framework, they're still trying to figure stuff out, they're trying to open themselves to the international community or the market. It's still an emerging market, it's still a developing market, it hasn't fully developed yet, but in the next 5 or 10 years, we do expect it to be a lot more straightforward. And how I can say that is because every single day you see improvements within the process which make it easier and more accessible to the international community. So we spoke about the MISA license in the beginning. Now, basically, what is the MISA license? So the MISA license basically acts as a link or a chain or a mediator between your parent company and the company that you're going to expand within Saudi Arabia. This license basically allows 100% foreign ownership to then expand a company underneath this licenses umbrella. You generally have 9 types of different licenses that MISA offers. Depending on the nature of your business and your activity, we'll pick one for you and then essentially get you that specific license. Now, a lot of these licenses over here come with their own set of requirements. The most popular one that we have used in the past is the services license. So that's construction, marketing, anything which is a service and there's no actual physical goods being sold to the end user comes under this category. You're able to have 100% foreign ownership, no minimum share capital is required, and paid up capital is about 50,000 Saudi riyals. Now, the mining license or the industrial license or the agriculture license share the same requirements as the service license. The trading license is a bit tricky to have. So you think that trading would be easier, and that's generally a lot of businesses that you see around yourself where they're selling physical goods to their end users. But trading actually is one of the most difficult licenses to obtain within the kingdom, not in terms of the process because it shares the same process as the service license, but the requirements for the trading license, they vary. You can have 100% foreign ownership, but you need to invest 30 million Saudi riyals within the first year. You need to have 3 branches of the business operational at the time of applying for the license, and you need to promise another investment of 175 million Saudi riyals over a course of 5 years. So that's basically investing about 30 million into the business every single year for the first 5 years. Now, that money can be utilized for the business, but it needs to hit your company's account, after which it can be utilized for your day-to-day business. The real estate license again shares similar requirements. So you have capital requirements associated with it. It's actually subcategorized. So you have a developer license, you have a real estate investment license, and then you have a brokerage license. All of these have different requirements. And if anyone is essentially interested in this, we can have a consultation call later on, where afterwards we'll share our details and you can essentially get in touch with us. Professional license, as discussed earlier, so engineering, legal, tax work, accounting, bookkeeping comes under this category. You need a 25% local partner who's well versed within that specific field as well. So it cannot be any Saudi national. It has to be, for example, in your case, if you want to expand your firm to Saudi Arabia, you'll need to find a partner who's been doing Saudi tax for the past 8 years, and they need to own 25% of the business, and then you guys would own 75% of the business, and it would be a joint venture between these two entities. Technical office is similar to the service license. And then you have the RHQ license, which was recently introduced. Now, the RHQ license is actually a prerequisite to work with the government. So at the end of last year, the finance minister came out and they said that if you want to directly be involved with the government on any governmental contracts, you need to have your regional headquarters present within Saudi Arabia. Now, the RHQ itself cannot do any commercial activities, which means that you'll need 2 entities in Saudi Arabia in order to contract with the government where the contract value exceeds 1 million riyals. So the RHQ is only going to be there to win contracts, provide strategic guidance to its subsidiary or its company within Saudi Arabia. Now, there are a few benefits to the RHQ as well, which is essentially it is exempted from tax for the first 10 years. So there's no corporate income tax, and we're going to talk about that in a bit as well. And then you're exempted from Saudiization as well. We'll talk about that in the upcoming slides as well. Now, to qualify for the regional headquarters license, you need to have 3 trade licenses or 3 companies running at the time of applying for the license within 3 different jurisdictions. So you cannot have 3 companies within Dubai or within the UAE and qualify for it. It needs to be 3 different jurisdictions for you to qualify for the RHQ. And then essentially there are models that you can implement between the RHQ and your commercial entity to reduce the tax bill of the commercial entity, and then take that money into the RHQ, and then essentially you're able to get or reduce the tax bill of the commercial entity to an extent, and gain benefits from the RHQ's tax exemption for the first 10 years.
Let me ask you about trading. To what extent do I need to have a Saudi company to be able to trade in Saudi Arabia?
So, great question. It depends on the clients that you have. So, if, for example, you're a producer in China and you want to just distribute your product within the kingdom, or let's say wholesale it, you can find a local wholesaler who's willing to buy it from you directly from China, but that wholesaler will have its own trading license within the kingdom. It's possible to this extent, but if you want to be the person who's collecting money in exchange of a physical good, then you need the trading license. Then there's unfortunately no way around it. Now, so the trading license, if in the case of foreigners, is different as compared to the trading license in case of GCC nationals. If, for example, I was an Emirati and I wanted to set up a company in Saudi Arabia under the trading license, I can do so without any trading requirements. Now, I can just go there, start a company, start operating, and that's perfectly fine. Whenever you introduce a foreigner into the mix, so extreme example, the foreigner owns 1% and the GCC national owns 99% of the business, and they want to do a JV, the company still needs to invest 27 million Saudi riyals just for the first year. The other requirements, they go away. But being a foreigner, you need to essentially invest that money into the kingdom.
Okay. And how about e-commerce? Can I sell to consumers?
No, so e-commerce falls under the same category. What you can do is you can own a marketplace. So a marketplace is different from a e-commerce brand in the sense that a marketplace is a platform which you've created where you're connecting a consumer and a seller. So the seller can register as a vendor on that platform, and the consumer can come to that platform and buy from that seller who already has a trade license, and you're just a mediator between these two individuals. But if it's trading to its entirety where you want to launch your own brand, for example, I own a perfume company, it's online, I don't really have any shops, I want to set up a trading company in Saudi Arabia, I will need to go through these requirements, unfortunately.
Yeah, okay. So this is very good to know, because we know that there are a lot of Dutch-owned e-commerce companies in Dubai. So they will not have access to the Saudi market with their Dubai company.
No.
Okay. That's very good to note, because Saudi is, of course, the largest market in the region.
Yeah. So as I mentioned earlier, the setup process takes time. I mean, to sort of put it into perspective, so great example over here. We had a client who was working with the Ministry of Culture using their UK entity. The Ministry of Culture turned around and asked them to set up an entity within Saudi Arabia. Now, while they were working and before the Ministry of Culture told them to set up a company, we were in conversation with them and we advised them to set up a company, because Saudi can be really unpredictable when it comes to these things, and they could just tell you tomorrow that you need to have a company established by the end of the week, otherwise we're going to revoke the contract. And contrary to our advice, they ended up not establishing the business and wanted to run it with that same model, with the UK entity providing the services to the Ministry of Culture. Unfortunately, the Ministry of Culture turned around and said you need to have your company set up in Saudi Arabia within 2 weeks, and that's just a CR, or your commercial registration, which is possible, but it's very unlikely that you're able to do it within 2 weeks, because again, you have to gather up all your documents, you need to legalize them, send them to Saudi, translate them, and then you start the process. So they actually ended up losing a $2 million contract from the Ministry of Culture, where they actually ended up setting up in Saudi Arabia. Now they're essentially doing well, and they have other contracts with other ministries, but that contract, or that specific one that essentially strong-armed them into establishing a business in Saudi Arabia, was the one that they lost. So one thing I advise my clients is to prepare in advance, because in a perfect world, the process takes about 3 months. Now, realistically, it can go up to 4 months as well, because some parent companies, consulates take longer to legalize the documents as compared to other countries. Your documents are going to be sent to Saudi Arabia. They're going to be counter attested in Saudi Arabia. And then we start the process. And just what you're seeing on the screen right now takes about 3 months end to end, where the first stage is incorporating your business. So that's your name reservation, your MISA license, AOA, CR, and Chamber of Commerce registration. For those of you who don't know what a CR is, it's basically a trade license or a certificate of incorporation. Saudi just uses a different terminology for a trade license. It's called a CR. Stage 2 is basically compliance, so getting your registration with the Ministry of Labor, General Organization of Social Insurance, and we'll talk about these two ministries in the next slide. Then we get your national address, issue the general manager's visa, and then register you with Zakat Authority, or ZATCA, the Ministry of Zakat and Taxation and Customs in Saudi Arabia. Now, everything done up until the first two stages is done remotely through a power of attorney, which was awarded to us by your business to act on your behalf. Stage 3 is where we'd require your presence. The general manager comes into Saudi Arabia. We basically chauffeur them around to get them their health insurance, medical checkup, work permit, issue their Iqama. And once that's done, we activate or register for the governmental HR portals. So Mukim, Abshir, Mudad, and Kiva. And then the last step is the bank account opening for the business, after which you're now allowed to do business within the kingdom. So Saudiization. Now, this is a very interesting one, and this is a question that I get asked a lot. Now, what does Saudiization mean, and what is the Natakat system? So Saudiization means the mandatory hiring of Saudi nationals within your business. Now, you essentially, why that's important is because the Saudi nationals or the Saudiization system will allow you to hire more foreign employees. It will allow you to bid on government contracts, or essentially win government contracts, and I'll tell you how in a bit. And yes, those are the two main benefits of the Natakat system. But basically, the first person after general manager has to be a Saudi national in order for you to hire more expats. Now, generally how this percentage works is that it's a ratio of 1 to 4. So for every Saudi national that you hire, you're allowed to hire 4 expats within your business. It can be 1 to 5, it can be 1 to 6 as well in some cases. It's generally the average of your Saudiization. So what I mean by that is that each activity on your license has a Saudiization percentage associated with it. So if you have 5 activities, your specific Saudiization percentage would be the average of those 5 activities. And it could be 1 to 4, it could be 1 to 5 as well. So how it would work is you hire a general manager, as we discussed in the previous slide. Now, you can operate in Saudi Arabia, that's fine. You don't need to hire a Saudi until your first year ends. So upon renewal, you need to hire a Saudi national in order to renew your licenses. But if you want to recruit more people, then you need to hire a Saudi national, because currently your visa slots are closed off. So you hire the Saudi individual within your business, the slots get opened, and now you can sponsor people on your company's visa to be your employees within the kingdom. So the general manager, Saudi, and you can hire 3 more expats because the general manager took up 1 spot within your Saudiization system. So that's how it's 1 to 4 within the Natakat system for yourself. Now, how it's important to win governmental contracts. So you can see these percentages or these colors over here. So green being the highest, and then red being the lowest. Gray being the highest, which is platinum, and then red being the lowest. So for example, you're bidding on a contract and it has 10 points for Saudiization within the overall points for the bid. Now, if you're at, let's say, in the red zone, you're probably going to have a Saudization percentage of 16 or 0, as you can see in the first column of the red, where it's 0 to 16%. Then 17 to 20% you're in low, and so on and so forth, which means that out of 10 you'll get 1.6 points towards that specific bid for the Saudization section within that. And if you're in the platinum zone, you could get a 10 out of a 10, which would contribute to the overall score of the bid, which would increase your chances of winning the specific contract. Now, minimum salary for a Saudi national is about 4,000 Saudi riyals a month. And then essentially within this Saudization system, there's a layer or there's a deeper explanation to what a Saudi individual is within your Saudization system. So for example, if you hire a part-time employee, that would contribute as 0.5 towards your Saudization score. So which means that you need to hire 2 part-time employees to contribute as 1 individual within your Saudization or Natakat system. If you hire a specially abled individual, someone who has a card or disability card from the government, they contribute as 4 Saudi nationals towards your overall Saudization system, and you get, if your ratio is 1 to 4, you get 16 slots to then hire expats just by hiring that 1 individual.
Right. And 4,000 riyal is about, I think, 950 euro for reference.
Give or take, yes. So the topic or the reason why we're here essentially is tax within Saudi Arabia, and what does that mean for foreign investors. Generally, foreign-owned companies are taxed at 20% corporate income tax within Saudi Arabia. Zakat isn't applicable to foreign-owned companies, but it applies on companies which are owned by GCC national, and the rate for that is 2.5%. Now, in some scenarios, we've seen where you have a joint venture between a foreigner and a GCC national. So let's say 50% of it is owned by a foreign-owned company, and then 50% is actually a GCC national. And I want to sort of emphasize on this as well, that it's a GCC national, not a GCC resident. So me being a foreign national, I'm a GCC resident, but I don't hold the passport, so I'm not a national. So I wouldn't qualify for Zakat, and I would have to pay corporate tax if I own a company in Saudi Arabia. Now, going back to the example, let's say 50% foreign owned, 50% GCC owned, the tax would be 20% of it would apply to the 50% of the profits for that business, and 2.5% zakat would be applicable to the 50% that's owned by the GCC national. And then you have VAT within Saudi Arabia, which is at 15%, and withholding tax, which is between 5 and 20%. And I'll essentially invite US to comment on this as well, please.
Yeah, the withholding tax is interesting. In the tax treaty between Saudi and the Netherlands, which is quite a good treaty, by the way, much better than the one with the Emirates, for instance, there's 3 kinds of withholding tax regulated, on interest, on royalties, and on dividends. The one on dividends going out of Saudi Arabia to a Dutch individual, which we will later hear will never happen, is limited at 10%, but to a Dutch company is limited at 5%. So Saudi is allowed to withhold 5% withholdings on a dividend paid from a Saudi company to a Dutch company. Ibtasam, do they also withhold that?
They do, yes.
They do. And the same goes for royalties. They are allowed to withhold 7% on outgoing royalties. Do they?
Yes, they do.
They do. And interest 5%. They do as well.
Yeah. Yeah.
Right. So this is something you do need to keep in mind. On top of the Saudi corporate tax, there is withholding tax on payments leaving the Kingdom of Saudi Arabia, if there are interests, royalties, or dividends. Is there also a source tax on outgoing payments for services, for instance?
So again, I'll have to check, but from my understanding, yes. And it's actually higher. So depending on the treaty, and if it's a non-treaty, I think it's 15%.
Right.
for professional services. Yeah.
Yeah. So what this means overall is that Saudi Arabia is not, for foreign investors, a tax paradise. You do not go to Saudi to get a better tax position than you have in Europe. The tax rates are actually almost the same as in the Netherlands. It's just a very commercially attractive jurisdiction.
It is, yes.
Yeah.
And just to sort of comment on the frequency of all of these before I essentially let you just take over. So you need to do your VAT returns on a quarterly basis. Even if the business isn't generating profit, you still need to file negative VAT returns. Corporate tax, again, is yearly. And then withholding tax, you need to maintain your records and update that in the portal on a monthly basis. And then similar for zakat as well, that's on a yearly basis as well.
Yeah. And earlier you said that the regional headquarters gets a tax discount. Does that also apply to foreign-owned headquarters?
Yes, so it's actually for foreign-owned. Well, okay. for both foreign-owned and GCC national-owned, but you have a 10-year tax waiver for the regional headquarters.
Okay, so that's an interesting option for Dutch investors in Saudi. If they manage to make this company into a regional headquarters, they would benefit from a lower tax rate or from a tax exemption.
Yeah.
That's very interesting.
One thing to essentially keep in mind over here, and I've seen this sort of advertised in a very wrong way, it's not 0% corporate income tax. So, but what it actually means is that in order to do business within Saudi Arabia or with the government, you need to have a regional headquarters. Now, that RHQ is exempted of tax for the first 10 years, which means that it's not going to pay any corporate income tax on the revenue or the income that it generates for the first 10 years. But it's limited to only provide strategic advice to its subsidiaries or companies within the same group. This is never going to directly receive funds from a consumer. The commercial entity is going to receive funds from the consumer, and then you can essentially, for strategic advice, marketing services, X, Y, and Z, you have about 15 or 20 activities that the RHQ is allowed to do. The RHQ can bill the commercial entity for these activities, reducing the tax liability of the commercial entity. And then because this is tax-free, you can essentially do dividends for the RHQ.
Right.
That's
and this needs to be at arm's length.
Because what I see in the market is you see a lot of people claiming that you can have the RHQ and you can get 0% tax, but that's rarely the case. There's usually more to the story, but it's sort of unethical advice, and I just want to sort of clear that up before we move forward. That's essentially it for a high-level overview of how you're able to expand yourself to Saudi Arabia or essentially do business within the kingdom. I'll let Joost take over and walk you through the exit tax piece for Netherlands.
One more question about Saudi tax. How about personal income tax?
So there's no personal income tax in Saudi Arabia.
Also not for foreigners?
Not for foreigners as well.
Then I will thanks Ibtasam for the Saudi part. It was very insightful. It is of course important if you are a Dutch investor or a Dutch business owner to know what will happen on the Dutch side of things when you decide to invest in Saudi Arabia. This slide is about exit tax. We have in the Netherlands exit tax on a personal tax level and on a corporate tax level. The personal tax level only applies if you as a business owner or you as an investor individually move to Saudi Arabia. We have not really discussed how easy that is, but we will assume that if you have a good business plan and a viable business, you will be able to get a residence and a work permit. So it is possible for a Dutch national to live and work in Saudi Arabia. In that case, you get a so-called protective assessment from the Dutch government. That means you have to report the fair market value of your own business to the tax office, you deduct from that the money that you put into it, so basically the share capital and any share premium contributions, and that unrealized profit basically is taxed with a protective assessment from the Dutch tax office. And if you move to outside the European Union, for instance to Saudi Arabia, you do not get an extension on the payment. So in practice, this means if you move outside the European Union as a business owner, you will be faced with a quite substantial tax bill in many cases, which you have to pay within about 1.5 years of moving. There are ways around this, and the easiest one is to provide Dutch real estate as a surety. So if you tell the tax office you can get a mortgage equivalent on my Dutch real estate, then they will give you a payment extension on the tax bill until you actually realize this profit. So this is important to know. Before you move to outside the European Union, you have to know what your business is worth, because you will be taxed on the unrealized excess value of it. And the tax rate is the normal box 2 tax rate. Box 2 is the Dutch system for taxing substantial shareholding. So this is 31% is the top rate. So it's a substantial tax bill you're faced with if you leave the Netherlands as a business owner. In corporate tax, there is a similar circumstance. If you move a material business, so it doesn't have to be a BV, but if you move the business within a BV company, for instance, you have a consulting business and you have a fixed amount of clients, you have ongoing business, and you just move that to Saudi and start invoicing from there, you will still pay exit tax. A company will pay exit tax, corporate tax in the Netherlands. So that is very good to keep into account. You cannot just move your company to Saudi Arabia and stop paying tax in the Netherlands. No, you will again be faced with exit tax. What we usually advise to our clients is start a new business, expand to new markets, develop a new product, and do that from Saudi Arabia, do that from Dubai, do that from a foreign entity. But if you move an existing business, you will be taxed on what is basically goodwill, on future profit. We have a few numbers on the slide here. Tax residence fiction. The residence fiction is good to keep in mind. You are a tax resident in the Netherlands if the center of your life is in the Netherlands. This means, where is your GP, where is your dentist, where do you celebrate your birthday? These are circumstances that the Dutch tax office looks at. If you really factually live in Saudi Arabia, you will not be considered a tax resident from a Dutch point of view. This is not just a matter of counting days. It is really the circumstances of your life. However, there's one important exception to this, and that is gift and inheritance tax. If you have lived in the Netherlands and you are a Dutch national for 10 years after moving away, you will be considered a Dutch tax resident for inheritance and gift tax. So always keep that in mind. You cannot just go around giving people stuff because you will still be taxed in the Netherlands, even though Saudi may or may not have its own gift tax system. I assume not, Ibtasam?
No, I believe not.
No, but if you are a Dutch national living in Saudi for 9 years and you gift something to a random person wherever in the world, the Netherlands could in theory still claim gift tax on that. Can we go to the next slide? I think I already explained this thing. One very important subject is the exit tax discussion that played up in our parliament last year. And this has got a lot of people worried. And on social media, there has been so much content about the new Dutch exit tax system. However, it has not been introduced. This is important to stress. There was a plan, and it has been discussed in Parliament, that a Dutch national would remain a fictional Dutch taxpayer for 5 years, let's say 5 years, and pay income tax on its worldwide income and assets. First of all, this of course will be a breach of all the tax treaties we have. But in the situations where there's not a tax treaty, for instance, if you live in the United Arab Emirates, this would be a problem. However, this has been discussed in Parliament, nothing has been done with it, and the most recent update is that the Secretary of State for Taxes said he will look into this, but only in a European context, meaning he will await EU legislation. And since then, of course, our government has fallen and there will be elections in October, so we have no idea if this is ever going to be introduced. The tax residence, one more thing of the last slide, Ibtasam. The tax resident investigation, in Dutch woonplaatsonderzoek, is really the very, very last thing you want happening in your life. If the Dutch tax office has indications that you still live in the Netherlands, even though you claim you live somewhere else, they will start a serious investigation which will take years of your life. So really avoid that. If you want to move, whether it is for personal reasons or for tax reasons, really move. I cannot stress this enough. If you want to pay tax in another country, fine, but really move to that other country. Start a new life there. Make sure that the center of your interests is in that country, and do not give the Netherlands a reason to suspect that you are still a resident here. This is something that's really taken very seriously by the Dutch tax office. What I always say is, this also means that you should not move to a country that you don't like living in.
So
Next
I
slide.
have a
Yeah.
question over here, Joost. So,
Mhm.
for example, I'm an investor in the Netherlands. I have a passport, my family's there, and I essentially expand a company, let's say, to the UAE or to Saudi Arabia. I'm here full time. My life, quote unquote, interests and hobbies, everything is within the UAE. But my kids are in school in the Netherlands, and they essentially want to complete their term before they move out. So, or in some scenario, let's say they're in university or X, Y, and Z, but they have to stay over there. What does that mean for me as an investor?
Yeah, that's well, if you're not a Dutch national, I think you're in a slightly easier position. If you are an expat that used to live in the Netherlands and now moved away and left something behind. But indeed, if you are a Dutch national and you choose to take tax residence or real residence in the UAE or in Saudi, but your children who are under 18 do still live in the Netherlands, that will always be a strong indication that you have personal ties to the Netherlands. So that is far from an ideal scenario, and we know that the tax office feels this way. However, there are also other points of view. For instance, some very prominent, sorry, I don't know the English term, but prominent figures in the legislation have stated publicly that not having a place of residence in the Netherlands basically already means you don't live here. In the case of children, it's a bit complicated because where do the children live? And is that not always a place that you have always access to? But we see this quite a lot in practice, especially sadly in divorce cases. The children stay behind, live with their father or mother, and the other partner moves to the United Arab Emirates and visits the children regularly. But yes, that could be reason for the Dutch tax office to claim tax residence. So you have to be very careful that if you do that, you, for instance, do not work in the Netherlands, you do not sign contracts, you do not do anything related to your Dubai company. You have to keep things very strictly separated.
All right, so one thing that I'm understanding from what you just mentioned is that it's really important to get clear tax advice before making any moves as an investor, because it could become very costly in the long run.
Exactly. Well, especially if you plan to move personally, that is really something you should not do before getting proper advice. For investments, I guess you can always make changes afterwards, but it's very advisable to get this looked at in advance.
Perfect.
Yeah, this is what I just talked about. This is that proposal that was discussed in Parliament. The last update is that it's not going to happen. Yeah, I already also covered this. This is the protective assessment, and this is really the problem for business owners who want to move outside the European Union, because if you cannot get a payment extension, it will always mean a cash flow problem, because you did not realize the profit that you are being taxed on. And And in some cases, and this doesn't apply, I think, to Saudi Arabia, in some cases, the country where you move to will again tax those profits when you do realize them. And this is also a good reason to talk to a tax lawyer or a tax advisor, because most tax treaties do, of course, prevent this. Yeah, very often we get the question, can I, as a business owner, not just register my IP in Dubai or in Saudi or in any foreign country and pay royalties to there, or let the clients pay royalties to there? And the answer is not really, because we look at people functions. If you want to have your company in a foreign jurisdiction, you have to have substance there, which means basically physical presence. And more importantly, if you want to attribute profits to that company, you need people there who have responsibilities, who have a value for the business as a whole. So just registering a URL or a recipe or something like that, any form of intellectual property in a Dubai or Saudi company will in itself not attract any tax, profit and then tax to that company. Hire a lawyer in Abu Dhabi, in Dubai, in Riyadh to protect this IP. Hire someone to develop it. Make sure that the marketing team is there. All these things, keep in mind that people functions are important. Empty companies do not work from a Dutch tax perspective. And this, I'm sure you have seen this also in the UAE market, Ibtasam, is far too easily sold in the market. A lot of people will tell you that you can just start a business in Dubai and allocate profit. It is really not that simple.
Yeah, and it's not advisable as well, right? And I think this goes back to the conversation that we were having before the webinar, where you just need to be careful, because one thing that we've essentially realized between working together and essentially working over here as a business is that there's a lot of misinformation in the market. People will tell you anything and everything to get you in the door, and then just essentially get you hooked, which could essentially mean a very costly mistake later down the line. You're not going to be compliant. Your structure is not going to achieve what you wanted to achieve. And then you end up paying the fines, paying the penalties, and then redoing the whole thing over again.
And one very common misconception is that the UAE and Saudi may have a different definition of what it is to be a tax resident. So the sole fact that the UAE or Saudi Arabia consider you a tax resident does not mean that the Netherlands accepts that. So you always also have to be a tax resident of that country from our perspective.
Absolutely.
No.
All right. So that was pretty much it. Thank you so much, Joost, for your time today. I'll essentially see if we have any questions.
I see. We discussed before that there is one subject we may touch upon if we have time. We do not have time, but do you still want to talk about it for 5 minutes?
Yeah, we can essentially speak about it for 5 minutes.
Okay, because it is a question I get a lot, and that is, can a foreigner, can a Dutch national in this case, a Dutch national and resident, buy real estate in Saudi Arabia?
So it's kind of a gray area. So yes and no. They have introduced the legislation where they say that you can buy real estate being a foreigner. We're still trying to understand the framework around it. Now, another option to essentially own real estate is by getting a premium residency, which is basically getting all the benefits of a Saudi national without getting the passport. So going down the premium residency route, you have two scenarios. One is where you invest or pay a fee of 100,000 Saudi riyals every month to maintain the residency, and you can sponsor your kids, you can lease a house, buy a house, mortgage, X, Y, and Z. And the other one is where you invest 800,000 Saudi riyals as a one-off fee to get your premium residency, and then you can buy a real estate. But now what they're doing is they're trying to open it to anybody. They have introduced it in the sense that they've announced that you can now buy it. We're just trying to understand how you're able to do that. which is going to be a month or 2 months at the max, where they come up with like real legitimate framework. But in short, yes, you can, being a foreigner.
Okay, so the kind of real estate investment that is happening in Dubai, of course, is now being considered in Saudi as well.
It is, yes. Yeah.
Okay, and just like in Dubai, I presume that rental income is not taxed.
It's not.
No, and capital gains presumably
No.
neither. Okay, so that's
So they're following a very similar framework to how UAE is. Just the percentages change, but the same taxes apply in Saudi Arabia as in the UAE.
Okay, great. Well, this is a huge market that is opening up, and well, we are really out of time, but this is also interesting from a Dutch tax perspective, because the treaty with Saudi does allocate this kind of income to Saudi. So if Saudi doesn't tax, then that's a very interesting situation.
It is 100%. And again, like we were discussing earlier, and I think we can essentially speak for a couple of minutes, was which jurisdiction should you end up choosing between Dubai and Saudi, right? Now, it's not a yes or a no answer. It's not a 1 or a 0 or a binary answer. It's more dependent on a case-by-case basis. We've advised UAE clients to not establish to the UAE and actually choose Saudi as a jurisdiction. We've advised Saudi clients who were initially interested in Saudi Arabia to choose UAE as a jurisdiction. It all depends on what the client wants and what their end goal is. Dubai, it's easier to set up, the cost is low, compliance cost is low, but the market is a bit saturated. So the opportunity is there, but it isn't actually on the scale where it's or how it's present within Saudi Arabia. So if you can sustain a Saudi business in the long run by essentially having some sort of financial backing for that business, you're able to invest money to keep the company up and running, then Saudi, of course, is a better jurisdiction. Again, case by case basis, but just generalized advice. Because the ROI is 10x as compared to UAE. But if you're just looking the Middle East from a tax perspective, you want to set up something not too costly, easy to maintain, then probably UAE is a better option as compared to Saudi Arabia.
Yeah, exactly. Saudi is interesting because it is a huge market. It is developing so fast. If you want to have something to do with that, you almost always have to have a Saudi company. If you have a business that's active worldwide or something online, you may as well do it in Dubai.
Yeah. No, 100%.
Yeah.
And yeah, no, thank you very much for your time today, Joost. One short disclaimer that I'd like to essentially leave over here in the recording is that anything that I or Joost said wasn't essentially tax advice. If you want to understand your specific case, you can reach out to myself or Joost. I'll send across the contact details for him and myself. So if you want a consultation, happy to do a one-on-one. And then we're essentially planning more webinars as well in the future, which you'll get invites to as well. And we'll be sharing the recording and presentation as well later on.
All right. Thank you so much.
Perfect. Thank you for your time, Joost. Thank you guys who joined in, and yeah. Have a good day. Bye.
See you next time.
Yep.